Last month, this crypto strategy made me $293,000, and my students are seeing insane results too. Because this is one of the best crypto strategies out there. It's super simple to use and it doesn't take a lot of time. So in this video, I'm going to be giving it to you completely for free, so you can just copy it. So let's get into the video. I will be telling you when to apply this strategy, which coins to pick and how to pick them. And then I'm going to show you the exact coins that I traded later on in this video with the exact system that I traded them with. And then I'm going to teach you a repeatable strategy to enter and exit the markets. And this does not require any luck whatsoever. So this is the market cycle. There are 4 stages of the market cycle. We have stage number 1, the accumulation. This is where price goes sideways. Then number 2, stage 2, we have the uptrend and the markup. This is, you want to be early to this. This is when you want to be doing your buying. Then price goes up. We then head into stage 3, which is distribution. And then this is the best time for selling. Then stage 4, we head into the downtrend or the markdown. And then we repeat the cycle time and time again. And look, I'm on the total market cap here on tradingview.com. And as you can see, over the years, crypto has repeated this exact same cycle. As you can see here, this is accumulation where price goes sideways. Then you have the markup where price breaks out. And then this is when you have the bull run. Then you have stage number 3 where you have distribution. As you can see, we go sideways. Then you have stage number 4 into the bear market and the downtrend, which some of them could overlap. As you can see, there's a bit of an overlap here into the bear market. Then what happens is we repeat this cycle over and over again, and then we head back into the bull market. So this is a repeatable strategy depending on the market conditions. And this strategy works best in a bull run when in stages 1 and 2, when asset prices are going up. In different market conditions, you need to apply different strategies. For example, nobody wants to buy a Christmas tree in the summer because it's not that time of year. And it's exactly the same with the markets. People sell assets when prices are going down, and people then buy assets when they're going up. This is why most people lose, and you need to time the market at the correct time in order to make a lot of money. And this is exactly what I'm teaching you in this video here, how to take advantage of the price volatility. For example, if you're going to be buying tokens in a bear market, your strategy is not going to work because all of the tokens are going down. And as you can see here, this is another example of stages 1 where price is going sideways and stages number 2 where we are in a bull run. So how do we know we are in a bull run, right? We also have the chart, as I just shown you. You can check the technicals for it, whether we've got an accumulation phase and then we've started to break up. But this is where really there are other indicators. Smart money starts to deploy capital and starts to go risk on in the markets. More attention starts coming onto the space. For example, even in TradFi, everyone was coming into AI. And in crypto, when prices start to go up, this is when attention starts to come into the space anyway. And then you also anticipate the prices will go higher later on in the cycle due to price action and then some fundamental reasons. As I said, there's going to be narratives. So you spot 1 or 2 narratives that start to perform well. At the beginning of the bull run, we started to see Pepe run. This is where I was doing my buying on Pepe down here back in 2023. Before, this was really one of the first movers in the meme coin space that led to the meme coin narrative. So in order to get rich, you do not need to trade 50 different coins and you do not need to trade 50 different setups. You just need one good setup. And that's what I'm going to be teaching you in this video right now, because the money in crypto rotates narrative to narrative. So you need to be buying tokens in the correct narrative. And how do we spot narrative? A narrative is just a category where the money flows from one narrative to another narrative. That is it. This is why meme coins done very well, because that was a hot narrative. Back in 2021, DeFi did very well because this was a hot narrative. And narratives are just driven by price, for starters. As I just shown you, Pepe was the first mover. Then people start to believe the narrative. For example, DeFi, everyone believed that this would take over the banking system. Meme coins, everyone believed that it was all about community. Community is everything. Everyone needs to be hyping about it. Everyone needs to start talking about it. And it gradually happens over time. And this is why not everything pumps in crypto, because all of the successful narratives have attention. And I'm going to show you why it's impossible for all of the narratives to never pump simultaneously. So as you can see, this is narrative 1. I will show you this one as memes, right? And then this one here is all of the old DeFi. What happens here is that last cycle, this is what people were saying, is they would say, I will never buy a meme coin at the beginning of a cycle. They only pump at the end of the cycle. That's what everyone was starting to say at the start of the bull run. So everyone was buying quality projects that had utility, right? So this started to move up first, and then we're here, right? So this is the narrative. Money is starting to flow into here, but money starts to flow into here a little bit more. It goes up slowly more, but this is up more. Then what happens is that they see this one pop up even more. Then these people are underperforming the market. They would have been better off buying meme coins at the start of the cycle. So what they do is that they start to sell some of their DeFi projects and start to buy memes. So as you can see, this pot of money is starting to get smaller here, and then they are buying more meme coins here as they start to increase even more. So now, as you can see, this old narrative starts to go slower. Not as much money is going in. The rate of money coming out of here into here, moving into other narratives, is exactly the same. So therefore, older tokens do not perform as well because a lot of people like to chase the shiny new stuff every single cycle. And that's exactly what we've seen so far. All of the old DeFi stuff, everyone's slowly sold over time and they haven't performed too well. And even if they do pump, what they'll do is that they'll sell back at break even to then move the money into the new sector here. So as you can see, the money shifts from the old sectors here into the new ones. And then as time goes on, more and more people get in. And then once there is more than enough people in and there is no new money able to come in because these guys were early. These guys are now sitting on tremendous profits. They start to take profits, and then what happens is that the whole cycle collapses and then the money flows back out. And that's how you see this exact same market cycle here. What happens? Early investors, price starts to move up. People sell from other narratives. They start to buy in, which pushes the price up even more, which makes the price of this one decrease, but this one increase, creating a bubble. Once this happens and once this pumps, and then we move into stage number 3, distribution, the bubble pops because there is no more new money to be able to come into the cycle to replace the amount of old money down here leaving the cycle. So these people who bought underneath here are leaving and exiting their positions for a profit. 2 people up here who are buying the top. And this is how, using this strategy, you prevent yourself from buying the top and you stop yourself from being exit liquidity. So what you need to do is you need to watch early outperformers. For example, in the meme coin space, we saw Pepe, WIF, and things like that. In DeFi, back in 2017, 18, it was Chainlink. As you can see here, 2019, Chainlink was outperforming the rest of the market. The rest of the market was down bad on the March 2020 crash. I know this one did dump, but it ended up recovering and was one of the top performing assets of that cycle. You also need to see where most of the trading volume is going to. If there is a new narrative, all of this volume of people buying and selling the old DeFi coins will move to the brand new meme coins. So therefore, all of the new meme coins will have all of the trading volume where all of the buying and selling is done. So you need to watch where the trading volume is going. And then you also want to keep an eye on X or Twitter to what people start talking about, which ones are the first movers, because there'll be a different type of energy around that system and it will pump a little bit more than the rest of the market. This whole system here was how I was able to spot the DeFi narrative in 2021. I spotted the AI narrative in 2023. I bought FET extremely low. This was where I was doing my buying on FET before it ran and did a 15x on my investment. And then this is also how I was able to spot Pepe and the meme coin narrative in 2024. So once you've spotted the narrative, it's step number 2. Simply wait for 30% pullbacks. This prevents you from ever buying the top. Let people get shaken out of their positions and then you can enter the markets. Because once price goes down, price goes up and then it goes down. This is where people panic sell. Exactly the same as my FET position here. As you can see, it was down over 60%. On the March 2020 crash, Chainlink dumped over 70% before one of the biggest bull runs. So what you need to do is wait for 30% plus pullbacks. Let people get shaken out of the positions and then that's when you can enter. Because 90% of people lose money in crypto and they do it because they have FOMO. They literally buy the tops of everything and then the second there's a small pullback, they sell. So if you simply wait for 30% plus dips and then you implement the next step, this then removes the largest thing that causes people their losses. This is especially important in crypto, this bull run, because 1 in 3 Americans now own crypto. There are more sophisticated investors now in the markets in crypto more than ever. So it is getting harder and harder to gain an edge in this space and make money. And that is exactly what you need. And I'm going to give it to you today. So this becomes step number 3, enter at a key support level. And I'm going to teach you how to identify them shortly. But you need to buy where price was previous resistance and has now turned into support, because this gives you the highest probability on your trade, because price is down 30% into a key support level. Therefore, price is likely to bounce in this area here and give us a good percentage gain. And I'm going to go deeper into this into the next step. However, you can identify a support and resistance level by zooming out onto the higher time frame, such as the monthly, the weekly, or the daily time frame. And then you can identify where in the past price was pushed away in time and distance. For example, as you can see here on Bitcoin, I'm on the daily time frame. Price was previous resistance here. It was very, very simple. We had resistance, we had resistance, we had resistance. Then we broke out of that resistance and we retested this as support. And as you can see here, this pushed price away in time and distance. We spent from November all the way to February 2020 away from that level. As you can see, we spent all that time away. We then retested it here, and then we pushed price in both time and distance all the way from February, March 2020, all the way until May 2020. And then we broke through, and then we retested this area as support. So in this example here, that is how you identify a support and resistance level. And you can do it time and time again. For example, here on Bitcoin, again, this bull run, as you can see, it pushes price away in time and distance. And then once we break back above this resistance level here, retest the support. Resistance now turns to support again, and then this is what led to this current bull run. And that is how we identify support and resistance. Then step number 3, once price has pulled back 30% into our support area, we just wait for price to come into there. So then once price has broken through and price is now pulling back 30+% into our key support level, in this period here, we just have to wait, because otherwise you're going to be FOMOing in on the top. So to recap, step number 1, zoom out on the higher time frame. Step number 2, identify where the support and resistance level is that has pushed price away in time and distance. Then step number 3, we need to wait for price to come into our key level, because if price is up here, that means that we are FOMOing in. That means you need to stay patient for price to dip 30% into our key support level, and then we wait. That is it. Step number 4, cut on a clean break below and ride it up. This is our entry technique. This is how we enter the markets safely with risk management, giving us the best possible risk to reward and tightest stop losses on our trades. Because we enter the trade because the move down was 30% down. It was overextended into our key support area. And then this gives us a tighter stop loss, which means that we manage our risk, and then a better risk to reward ratio, because this is our risk. And that means that this now is our reward. Therefore, you are not one of those people that just buy and hold all the way down. Let's say if you just decided to buy this support level, and then if it breaks, you hold all the way down to 0. If you buy the support level and the support level breaks, therefore you are wrong on your idea and you can manage your risk that way. So if the support breaks, cut the trade fast. And if it bounces, let it fly and scale out, because that's where we profit. And as you can see here, this is one of the trade examples that I called, which is Fartcoin. So this was the moment I was simply buying Fartcoin right here. The reason being was because I called this trade here. I waited for price to pull back into my support level here. As you can see, price had dropped from here all the way down into here. 40%, so 30+%, that is step 1. So step number 1, we are in a bull market. As you can see, price is trending higher, higher highs and higher lows. Then what happened is we had a key support area here, resistance, turned into support here, and then support here, and it pushed price away in time and distance. We then had to wait for price to pull back 30+% into our key support area. As you can see, price pulled back 44% here. So therefore, all I did was I simply bought this level here and I cut on a clean break below. I would have cut the trade on a clean break below the level. And as I was doing my buying into the 90 cents region. very, very simply, let me go down on the lower time frame. This was where I was doing my buying, and then I sold the position up here into these highs. As you can see, resistance, 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 turned to support here. So I anticipated that this would become resistance again. And this led for me to enter the markets and make over a 50% gain on this trade alone, just using this simple step system. Then the other trade here was on Bonk. Bonk was at the cycle lows here, and it was over a large extended move. So I'm going to show you this on the chart now. So now, as you can see here, I'm on the weekly time frame, one of the higher time frame levels. This was the key support area here. So support, support. This was the final level on the chart that it had price action, because below this there was no price action and it would have probably been a free fall to zero. So as you can see, this is a key higher time frame support level. I then waited for price to fall over 85% into this support area. So this one was a larger move into the support area rather than 30+%. So here it was an 85% down move into a key support area. All I simply did was I bought this level here and I cut the trade. I would have cut all the trade on a clean break below, and then I rode this position up. This netted me a 160% gain on my portfolio. So as you can see, a 1.5x. So I bought this position here, rode it all the way up for a 1.5x. And many of the other trades as well I took with this exact same strategy was Popcat here. This one netted me over a 350% gain. As you can see, we had done exactly the same thing into a key support area there. We then dropped over 92% on this one. This was a very, very large down move. I was then doing my buying in here that led to a 350% gain. And that is how simple this trading strategy is. Step number one, identify what market condition we're in, a bull market. I understand that Popcat was 95% down. However, Bitcoin was still bullish and the rest of the market was still bullish. Therefore, this one allowed me to take this trade. Step number two, we waited for a 30+% pullback. Some of them were 45%, 50%, some of them were 70%, and some of them were 90%. But all we do is wait for a 30+% pullback, because sometimes a 30% pullback is all you need. And then we entered at a key support level. And then if that support level broke, we cut the trade and we protected our capital. If the trade ran into a profit, then we obviously took profit on our positions. And some of my students, Faisal here, made over $1,000 just last week using this exact same setup with a $5,000 investment. And then Princess Girl here made over $9,500 last month using this exact same strategy. And then this also allowed me, myself, to make over $293,000 in the last 30 days. It's simple, it's repeatable, and it is working. As you can see here right on the screen right now, I've helped over 5 other crypto investors become verified millionaires. As you can see, Kaizen here, he joined over a year ago. The goal was to take the 1 to 100K trading challenge. He did this in 3 to 4 months, continued to stay in, and then he achieved over 7 figures. As you can see here, Jigsaw bought a Patek Philippe with the profits that he made inside. And as you can see, Obama on a bike here also bought a Rolex from one of the trades that we had taken inside. So if you would like to join these students and also hit 7 figures this bull run, then check the description below. You'll have to apply to join. And that's all for this video. I'll see you all in the next one.